Okay, let's go ahead and turn my screen on here today and let's get everything ready for you guys. And we are going to show you some amazing stuff here. I'm going to give you the entire month. Okay, so if you don't think that this is the most phenomenal information on trading the stock market indexes ever, I don't know what to tell you. Let's get right into it. Here we go. Screen is sharing. There we go. There's a disclaimer. You got that. Okay, here we go. Okay, there's a disclaimer. We got a flash out on the screen for you. We're going to jump right into it and keep this to a short video for you, okay? Because we got a lot to cover here in just a few minutes. Well, hopefully 10 minutes or so. Let's get through it. Okay, the iWave Trader and Professional is what we're going to be talking about here today. The Professional is, these are two different services, okay? The Trader is one membership and the Professional is another. The Professional is includes the day trading information, lets you know what's happening for the day, okay? Not little scalping things for 5 or 10 minutes. It's letting you know what's going on for the entire day and where the major highs and lows are going to be made for the day, okay? That's done on Telegram Messenger service. We'll get into that in a second. So there's the differences between the two memberships. We're only accepting 100 members max on this. That's for the public because we have our um, institutional commercial side of things that we do. Okay, so you can go to iwave.pro/order if you want to get to it, and there's the email for you if you have any questions, support@iwave.pro. And the difference between the two of them is the professional gets everything that the trader service gets. The trader service is an email service you get right in the morning every day, and you have the long-term stuff as well, and you get the major stock markets, major stocks, the top 10 stocks, things like that, what's happening. We're going to get into that. We're going to run specific seminars on that because we have the most valuable service on individual stocks that I believe exists. Okay, so let's get into it here. We're going to talk about the algorithms. Each day on my trader service, right on your phone, pops up through the Telegram messaging service several things. One of them is the algorithms. Okay, it's the New York, Chicago algorithms, which control the day's direction. I'm sorry, London can come in and interrupt that and pick the high or low of the day as well. So you're going to get a line across your screen. Green obviously is bullish for the day, just for the day. It's not a multi-day thing. It's just for the day. And red is obviously bearish. The black line is sideways, which means the market should finish right there where it started at that line. And if it doesn't, it's coming right back to it the next day. That's the black line stuff, okay? So that's an overall view of it right there, real quick, which shows you each day what's going to happen for the day and where the market's going. Okay, so let's look at a couple things here real quick just to point these out before I get into the whole thing real in detail. So the first day, it was the May 1st, I guess, the first trading day in May. The green algo line, the market, it went up initially. The market chopped and chopped and chopped and chopped. Okay, so it didn't look too impressive for you there, right? So, and then it actually finished a little bit lower, about 2 points lower on the SPY. Okay, but look where it came right back up to the next day, right up to exactly on that green line. Okay, so if you see my cursor down there, you can tell on May 4th, it came right up to the green line from the previous day. They have to clear orders, okay? The entire way the market moves is between the liquidity providers on them clearing their orders if they're in negative positions, okay? So you're going to see this constantly. Then on May 4th, you see the red algo line there went down. The next day is a green and went up, blah, blah, blah. We're going to get into all these things, okay, and show you how this works, okay? So let's go right into it. Here's what something, it's not really what it's going to look like at the beginning of the day, but you're going to have no price there at the beginning of the day yet. And then you're going to draw an algo line for you, which on this particular day, on May 14th, just as an example, is a black line sideways. So we're saying the market's going to be choppy that day. That means New York and Chicago are fighting. They're going to push it back and forth, and it should be finishing right around that same area that it started at that black algo line. Okay, something like that. And then when the market does this, it should have finished at the black line, and it will a high percentage of the time. But in this particular case, it didn't because London came in and kept it up. Okay. And we tell you exactly right on your phone, it beeps right on your phone, say, hey, London's going to keep this market pushed up here today. If that London did not come in there, that market would have went right back down to that black line at the towards the end of the day. Okay, on that particular case, London kept it up. So what they're going to do is come right back down to it the very next day, and actually Oh, we don't have that chart here. We'll get to that chart in a second. That was what day was that? That was May 14th. We'll get to that chart in a second. Okay. So here's the algo predictions each day. These are the same charts we send out to members each day. Okay. And the members get several charts because we have a lot of information to give you. This is just one thing you get, which is the direction of the day. Green is bullish. Okay. Green is bullish there on May 1st as well. And then on May 4th, we got a bearish line. And here's what I was talking about on May 4th. It went right back up to that green algo line from the day before because it closed lower on May 1st. It should have closed higher than that green line. It should have been up higher. Okay, so they had to come back up on May 4th and clear positions. And you'll see this time and time again, constantly, how they come up right to that point, right to that exact point, just to clear positions. And then they turn it around. And then we knew that they're going to be bearish on that day. Okay, so bearish on that day. Look at the following days after that. Bullish on the 5th, choppy day on the 6th, but London kept it moving up. Look at that. London came in and pushed it up. And we let you know exactly to the minute when that's happening. Okay, so we said don't expect the market to come back down to the chopping line again. London's going to keep it up for the day. And look what they did. Okay, then you had a green algo line the next day. However, we still had to clear those positions from the choppy black line from the day before. Look how it went right down exactly to it on May 7th, right down to it. And then once they cleared positions, they have to go right back up above the green algo line again because they have long positions up there. So they're going to move the market up that way. Okay. Same thing on May 8th, bullish line kept going. Okay. Choppy algo line on May 11th. Look how the market finished right there. That's what we're talking about. That's a standard day where London does not come in and bother New York and Chicago. So the market's going to push pull right around that figure and close right about at that line right there. The next day was a bearish line, but look what happened. The market actually came down and then it got pushed right back up. And there's other reasons for that, which we notified people right when it was happening at the bottom right there. But it went up above it and closed above it. Should not have done that. Look what they have to do. The next day, May 13th, which was the next day, they came right back down to that red algo line because they had to clear their short positions before the market went up, and they knew they were taking it up, and they notified us as well. We know it when they're doing it. Okay, they went right down to clear those negative short positions, and then we issued a bullish algo line right in the morning, right then, and we said the market's going to be up for the day, and then look how it shot up for the day. Okay, so. Let me see, several days. That was what we just went over, all of those 5 or 6 days right there. Okay, and you'll know it exactly how the market's happening each day. And then we got the 13th, the market went bullish up there that day, and London actually came in and joined in with New York and Chicago to push it up, and we notified everybody right when it was happening. And so it's a great place to even add on more positions. Okay, there's that May 14th that we talked about earlier, that choppy algo day, but London kept it up for the day. And so we knew that they were going to come back down to it the next day. Well, look, they gapped right down through it. There was a reason for that. I warned everybody the day before on how far they could gap it down. And once they did that, we had a bullish algo line, and the market stayed upwards, but it was just choppy on the upward side, but it didn't go any more negative. And then we had the bearish algo day on the 18th, right down to the 734 level, which we told people that's where they're going to take it. Okay, 2 bearish algo days in a row. Nothing spectacular on those days. And then we had a choppy day on the 20th, which it was only choppy and finished higher because London came in and interrupted that and kept it higher. And so that's one of the rules we have is that if London does not come in and we have a choppy algo prediction that day, the market's going to finish right at that choppy black line right there. But if London does come in and interrupt it, they're going to keep the market up and then go back to that choppy line probably the next day or even day or two. Okay. So here it is. The market came down within zero point 0.4 the SPY points, zero point 0.4 of it. Went right down to it when we had a bullish algo day prediction on the May 21st, and then the market shot up right into well, we had a London overvalued at that time, actually, and told everybody that's going to be the high of the day right there. So the move's done. You can get out unless you want to hold it for the next day. The next day gapped up and we had a bearish algo day. So it was a choppy back and forth scenario. Okay, because London went the other way. Okay, so same thing here. We already talked about that 22nd. The 26th was a bullish day. Market came down, was a little bit low. It shouldn't have been down there, and it finished back up, which was fine. And then another bullish day on the 27th. So we knew they were setting up for something on the bullish side here because two bullish days did not really go anywhere. So we said, okay, they're going to move to the upside somewhere. And then there you go. The 28th, we could have did another bullish prediction day, moved it up. A bearish prediction day on the 29th, and they stayed below it and moved down. June 1st, which is just the other day. Nice, beautiful bullish day to the upside. London confirming it until it got to the top. Then we had a London overvalued scenario right there. June 2nd, bullish day again, coming up there towards the top. London confirmed it. London didn't push it much higher there at that point, though. And I told everybody I'm a little worried about that because look, London came in and agreed with New York and Chicago on June 2nd, but it did not push higher. They cleared positions because they brought price right back up to where they initially entered. On the London revalue there. But they did not go any higher. I said, okay, we got a nil issue here to the downside, maybe starting right here. Let's look at what happened after June 2nd. So there was June 2nd. And then look what happened. For 1.5 days there, it moved down, and we had a choppy algo prediction. I was kind of shocked we didn't have a negative algo on that day. So June 3rd was a choppy algo prediction, and it moved down and finished down lower than we thought. So we knew they'd come right back to the algo line the next day, and they did. We had a bullish algo line this morning, a beautiful scenario. 5 minutes after the open, I said, "Hey, all of the algos are leaning positive today." They're leaning positive. Hold on 1 minute for a confirmation. I can't remember. I didn't say 1 minute. I said stay tuned for a confirmation. And we confirmed it right after that. And we had a bullish algo day this morning, and the market shot up way past that algo line. And it was a bullish scenario, and they're not done yet. London came in and confirmed the New York and Chicago, so it was a wonderful bullish scenario today. You can know this stuff every day on what they're doing, what they're looking to do. They do not move like you've been trained they move. Okay. The overnight gap is not just from today's close to tomorrow's open. Okay. It actually goes in different spurts, and I'll show you what time frames it does it and when they're going to complete those things and fill gaps and stuff like that. Okay. It's a whole different language that you need to know. Okay. Our short-term scenarios, which last multiple days. This chart is scrunched up because I want to show you that this goes way back to when we had this initial position. This bull move has been incredible in the indexes all through May, and this system has been long the entire time. Okay, we bought it, never reversed. It kept giving constant re-entering of long positions because there was no short positions being issued from all the algorithms, the exchange algorithms we follow in London, New York, Chicago, back and forth. So that goes to middle of May right there, and we'll show you how it kept going all the way until today. Okay. The short-term position is still on the upside. It's bullish. Okay. Still going. And it still does what we call clearing position. They're clearing short positions. Okay. It's been fantastic, and powerful to watch. Um, so that's all the way until today. And that's what's happening. You can know this stuff constantly. If you want to do day trading, if you want to do short-term position trading, even if you're doing individual stocks, we do the top 10 individual stocks we follow for you, the top 10 companies. And but you have to know which way the indexes are going. Okay. Intraday is a wonderful thing. It's very powerful that we give our professional traders, but then we also have the multiple day directions too. We also give you a medium term direction trades. We give you long term directions, and we give you super long term directions of 9 different economic markets. Okay, interest rates, real estate, things like that. The stock market, of course, energy sectors, things like that. Okay, you're going to get all that stuff. Okay, that's all involved in what we're doing here. In the iWave Pro, the membership fees are going to be going up 30%. Get on there right now. We're only accepting 100 members total, okay, for the public. iWave.pro/order. You can go to the email if you have questions, support@iwave.pro, and we'll get you in there. Thank you for watching. I hope I didn't take up too much of your day. We have what we feel is the absolute answer to the markets, and we've been doing this for quite some time. Okay, over 42 years of staring at the markets, and then really about 26 years or almost 30 years of looking at this particular information. Okay. So something you want to look at. We hope you get on board. Come join us. You're going to know where the market's going. Okay. Thank you so much. Have a great day. Bye bye.